Today we're doing a site visit on Harvey, one of our multiplex deals that we're very hot on these days. This is a great missing middle product, and we're right here in the thick of Toronto, on Eglington West.
23.5 foot lot, standard mutual drive. One common entrance for the 4 units.
And stairs go right up here?
Stairs go all the way up. The windows to the right of the building are the stairwells.
Okay.
So basement unit, partially submerged, and 3 units over and above that.
I'm Brian Dorr, president of RealAlt and Dorr Capital. With me is Gerard Caverson.
I am vice president at Dorr Capital, working for Brian Dorr.
Gerard, you brought us this product. Tell us why, what attracted you to this and why this is a good fit for RealAlt.
I think it's an interesting product, not only to enhance the housing stock in the city, but it fits our profile in terms of risk parameters for an investment. So the acquisition price and the construction costs for a 5-bedroom, for a 5-unit property, 4 in 1 main building and a garden suite, are roughly $3.5 million. So the equity contributions, anywhere from 20 to 25%, are within the capacity of a small builder developer to meet to. And the added benefit here is CMHC takeout financing at the end of the day. So at Dorr, CMHC certificate of insurance on takeout is not a requirement for the underwriting on the construction facility, which Dorr provides, but it provides a guideline in terms of what to expect when the project's completed. These products are good for RealAlt and Dorr Capital because they turn every year and a half. So it's a good investment opportunity for us, and we feel like we're helping the city address the shortage of family-oriented rental stock in the city.
Let's follow Gerard in.
Every unit is identical, and you do it so that your mechanical runs line up to save some money. Morning. Mechanical, washer and dryer.
Great. Yeah. It's a great design.
We liked that better than using 2 systems. And the only reason why you use 2 systems is you don't have the electrical capacity to run one or the other. But again, everything the same. A lot of pot lights. We're not skimping on that.
This is a nice common area. So kitchen's on this side?
Yep.
Living room? I guess theoretically dining, or it could be living, dining, whatever way you want to orient.
So a couple of reasons why we're excited about the opportunities on properties like this. So it is close, it's an intercity lot, close to major transportation routes. LRT just up the street, Allen, Black Creek not far off. But it also provides a built form in a 3-bedroom, 2-bathroom unit with upgraded amenities that don't exist in the city outside of a condo. And there's very few condos that have 3-bedroom, 2-bathroom units.
Yeah.
So we like the idea that we're utilizing existing infrastructure in a mature neighborhood that's family friendly.
Yeah. And fortunately for you, you'll be taking occupancy just about the same time as the LRT is opening.
Hopefully.
Which would be a great bonus for your tenants. Gerard, why is this great from a development point of view?
That's a tough question, and my hesitation isn't that it's not great from a development perspective. There's a lot of challenges. So notwithstanding this 5-unit building is as of right by virtue of the City of Toronto enacting Bill 23, it still has a lot of challenges with it. So the major benefit of Bill 23 was no DCs. You have to follow certain steps to make sure that you don't get it. And the rationale for following those steps, it's about a $500,000 swing to your project budget. If you have to pay your DCs, it's questionable whether this type of development makes any sense. But the benefit for that is it spurs development in the city. It uses existing infrastructure, uses existing transportation routes, and you're developing a product that we feel there's a void in the marketplace.
And would you say the timing's better? Like from a start to completion point of view, like when you acquire the lot to when you feel like...
So the city's pretty good in dealing with permits.
Yeah.
So if you have a complete application and you go in, it's probably 2 months until you get a building permit. You can build these in about a year. So there's far less risk associated with it because your time frame is compressed.
Yeah. And the CMHC MLI Select program?
That's the benefit of the 5 units because the CMHC MLI Select has a minimum of 5 units and qualifies. The amortization really helps and it provides the developer with a reasonable return. The incentive here is as a developer you can build and hold or you can build and sell.
Yeah.
And my belief is that it's a relatively deep market for investors looking for new rental property within the city.
And how do the costs compare, let's say, to this compared to building a high-rise condo?
Wow. Much cheaper building this for a lot of reasons. One, your hard costs are significantly cheaper, but the major cost saving is just time to completion. It's a 12-month time frame as opposed to however many years it is.
Yeah, time is money, really.
Time is money. So it is a process from an approval point that's still in its infancy. So the city's trying to work with things because not everything was implemented. This was one of the first applications that got approved. So it's interesting on how that goes. It's also, you have to, so if you're building a high rise, you're really half a block and you've taken over everything. Here, you have to respect that you're in an existing mature neighborhood and you're building where people live. You have to respect that. You have to respect noise bylaws. You have to respect keeping the road clean. You just have to do a whole lot. And I can't emphasize the importance of that enough.
So as you bring this unit online, we notice there's a lot of rental product in the area. What are your expectations on rent for this type of product?
So that's probably one of the larger risks. One of the benefits of building in city is you can do a 360 around where you are and you probably see similar product. So in this neighborhood, there are larger units, which this is, that are probably anywhere from 45 to 60 years old. They're 2-bedroom units. They don't have in-suite laundry facilities. They don't have air conditioning. They're generally in a larger building. So what we did is we looked at the market and we thought, okay, if the market for a larger unit that doesn't have the amenities is this, we perform largely on the same thing. Our comfort level is that we're not competing with a lot of product in the 3-bedroom, 2-bathroom, in-suite laundry, air-conditioned units.
Yeah, definitely the missing middle.
So here's the garden suite. 125-foot depth on this site, which is important to get the coverage so you're not pushing on variances. We've opted to spend a little bit more money on the exterior of the building. The choices on exterior cladding, Stucco was probably the most expensive. The easiest to use would have been a material that looks industrial.
Oh, I see.
So
Yeah.
we opted not to do that. One of the big features in terms of the product is the 3-bedroom, 2-bathroom. It is the fact that the units are air conditioned, which there's all kind of units around here. Very few of them are air conditioned.
Yeah.
So we're kind of happy about that.
So pretty feature rich, pretty comfortable.
Yes, so certainly a neighborhood in transition, but attractive to a lot of people in terms of where it is.